Hey there, I wanted to share a quick story about a phone call I held earlier this week with a potential borrower. We were lamenting about the higher interest rate environment, and I was proposing different loan options to help offset the fact that mortgage rates have increased in the month. And I'd proposed an option that had higher upfront fees and a lower rate, referring to a loan with points. And the borrower said to me, Evan, I never pay points. And it made me realize there's just a lot of misinformation out there about what discount points are and what they ultimately do for the borrower. So I want to record a short educational video to explain to professionals and borrowers what discount points are. You can think of it as the bank saying, hey, either pay me now or you can pay me later in the form of higher interest rate. A discount point is an upfront fee that a borrower pays, typically expressed as a percentage of the initial loan amount, in exchange for a lower interest rate over the life of the loan. Here's an example. This is based on a $500,000 loan amount. And as of the day I created this, a 0 point option was available at 7.375%. That creates monthly payments of $34.53. Now, this borrower also has the option of paying a 2% discount fee. 2% of the initial loan amount increases the closing cost by $10,000, but they're able to lock in a rate of 6.625%, which of course is 0.75% lower, and creates monthly payments that are $250 less. Now, we can look at the total cost of each of these options over the entire 30-year term of the loan. And what this shows us is that if the borrower elected to pay points, they would break even at the 32-month mark, meaning that after they made their 32nd payment, they would have saved in accumulation $10,000 of interest as compared to taking the higher rate. And if you look at it over the entire term of the loan, in this example, this borrower would save $80,000 over the 30-year term if they elected to pay points. Now, it's unlikely that any borrower keeps their loan for 30 years. The reality is that on any given day, lenders can offer a variety of interest rates as well as discount point options. So here's a matrix that shows rates from 6.625% where the borrower is paying 2 points, all the way up to 7.375% where the borrower is not paying any points. And you can see the discount points incrementally increase as the rate goes down. It's beholden of the loan officer to assist their borrower to help them identify good opportunities. For example, in this matrix, 7.125% has a break-even period that's only 14 months. That interest rate looks attractive as of today. So let's say that you're a borrower and you're wondering, should I pay points or should I not pay points? Let's take a look at this example here. We've got Sally and Sam. They've welcomed their first child into the world. They're looking at transitioning housing into something that they foresee themselves being in for the long term. The longer a person's going to be in that home and have that mortgage, the more likely they are that they're going to accrue interest that's going to exceed the initial cost of those discount points. But they have to have the cash on hand to be able to afford the higher upfront closing costs. Now, in some cases, we just have borrowers that pay points because even they don't necessarily think they're going to be in the home long term. They're just trying to create payments that are more affordable, given the fact that interest rates are elevated. Now, when does it not make sense to pay points? Well, let's say that we have our other couple here. We've got Natalie and Tom. They just got married. They're looking at buying their first home. And typically first-time home buyers don't keep their loans as long as others. If they don't expect to keep their home long-term, it typically doesn't make sense to pay points because they're not going to have the loan long enough to recoup that savings. Or oftentimes first-time home buyers don't have the cash position to be able to afford their down payment, the standard closing costs, and any additional discount points on top of that. The third reason why someone may not want to pay points is because they think interest rates are going to drop. If interest rates were going to drop in the next 1, 2, 3, 4 years, and that borrower is going to refinance anyways, then there's no point in paying a bunch of discount fees up front to take the lower rate. So bottom line, final thoughts here. It always makes sense to at least consider the option of paying points if you're looking at buying a home. Lean on your loan officer, help them, allow them to help you understand what your options look like and help them identify where the good values are. Also remember, if you're negotiating a real estate transaction, you may be able to ask for a seller credit to help offset the cost of those points. But listen, if you have questions about your situation and wondering if discount points make sense for you, please call us today. Thank you.